Welcome to the Deep Dive. Today, we're tracing the ripples of a significant development in global trade, the newly announced tariffs by U.S. President Donald Trump. We're focusing specifically on that 10% tariff now hitting goods from the U.K. It's got a pretty fascinating collection of sources to unpack this. Reports from BBC News, Sky News, The Standard, all giving different angles on the potential impact.
Yeah, a real mix.
So our mission in this deep dive is to get beyond just the headlines, really extract the crucial info about these tariffs and what they might mean, especially for the UK economy, for businesses. We want to give you the key takeaways, kind of connect the dots, leave you feeling informed, but not overwhelmed. Okay.
Sounds good.
So to start, what were some of those immediate shockwaves felt by UK businesses when this news actually landed?
Well, the immediate reactions were definitely mixed bag. It really highlights just how diverse the UK economy is in terms of its exports to the US. We saw everything from, deep concern in some sectors to a more sort of wait-and-see approach in others.
Let's dive straight into that concern then. The Scotch whiskey industry seemed to have a particularly strong and, immediate response.
Absolutely. Anthony Wills, he's the managing director at Kiltrim Distillery, described the announcement as a huge blow, said he felt genuinely deflated.
Wow.
Yeah, and he pointed out that the United States is their single most important overseas market. We're talking annual sales of what, 971 million? Substantial.
Huge numbers.
So this new 10% tariff, it represents a significant chunk of their revenue now kind of at risk. But what's interesting here is that the impact isn't just about this new tariff in isolation.
Right, because they've been here before, haven't they, with tariffs?
Exactly. Back in 2019, the U.S. imposed that 25% tariff on single malt Scotch whiskey. The Scottish Whisky Association estimated that cost the industry about $600 million in lost sales over just 18 months.
Ouch. $600 million.
Yeah. And Wills mentioned that they previously tried to cushion that blow, sort of splitting the cost of the tariff with their U.S. importers just to keep shelf prices stable for consumers. It sounds like they might be forced to, consider a similar strategy again.
Which raises the question, doesn't it? How sustainable is that kind of cost sharing long term? Especially with another tariff now in play.
That's the core issue. It sounds like a really tough position to be in.
Definitely. But, okay, we also heard some contrasting reactions. Denise Cole, the finance director at Tamo Valve in Wales. She had a rather different perspective.
She did, yeah, and it offers a really important counterpoint. Denise Cole actually expressed a degree of understanding for President Trump's stated aim, protecting U.S. manufacturing. Because Tamo Valve produces these highly specialized butterfly valves, things that aren't currently manufactured in the U.S., she doesn't actually anticipate a negative impact from these specific tariffs. In fact, they just secured a significant 1.2 million order from the U.S.
So the product type matters hugely.
Totally. What's fascinating here is how the nature of the product itself can influence your vulnerability to tariffs. It's not just if you export, but what you're exporting.
That's a key point, isn't it? But her optimism wasn't completely unqualified, was it? I remember reading something else.
No, not at all. Her primary concern wasn't actually these U.S. tariffs, funnily enough. It was the recent increase in employer national insurance contributions here in the U.K.
Ah, okay. Domestic issues.
Exactly. She said that domestic policy change has added considerably to their operating costs, even more, she thinks, than she currently anticipates from the U.S. tariffs. It's a crucial reminder, really, that businesses are always navigating this complex web of economic factors, international and domestic.
Yeah, good point. What stands out to you about that contrast, though? The whiskey guy versus the valve manufacturer?
It just really highlights that tariffs aren't a one-size-fits-all problem, The impact is so specific to the industry, even the niche a company occupies within that industry.
Okay, so let's move to another sector then, one that feels potentially quite exposed, the automotive industry.
You're right to highlight that one. Matt Harwood of Barclay Plastics, they supply parts to major UK car manufacturers. He voiced significant concern. He specifically pointed to that separate 25% tariff that's now in place on cars entering the U.S. and the likely knock-on effect that will have on component suppliers like them. I mean, if fewer UK-made cars are being shipped stateside,
then the demand for their plastic parts just drops off.
Yeah.
Makes sense. And the UK car industry has already been facing some pretty significant headwinds anyway, hasn't it?
Indeed. Matt Harwood himself noted the dramatic decline in UK car production. It's gone from over 1.5 million vehicles a year before the pandemic down to just around 800,000 currently.
Wow, that's nearly halved.
Yeah, and he fears that these new tariffs could really exacerbate that decline, potentially leading to job losses, not just in card assembly plants, but right through the entire automotive supply chain. He painted this picture of an industry already under pressure, where these tariffs could be, a further critical blow.
It really underscores how a tariff on one product, like a finished car, can just cascade down and hit numerous other businesses involved in making it, doesn't it? That interconnectedness of global supply chains.
Absolutely.
Okay, let's look at a slightly different angle now from Northern Ireland. Peter McCauley of Nomadic Watchmakers, he shared his perspective.
Yeah, his reaction was more nuanced, I'd say. While acknowledging the tariffs would have an impact, Macaulay remained cautiously optimistic. He mentioned they'd actually been planning for the possibility of higher tariffs than the 10% that was ultimately announced.
Oh, interesting. Proactive planning.
Right. The U.S. is a significant market for them, accounts for about 22% of their sales, so it shows some businesses are trying to anticipate and prepare for these potential shifts in trade policy.
But this uncertainty has led to a shift in their growth strategy, hasn't it? They're not pushing as hard in the U.S. now.
Exactly. Because of the ongoing uncertainty around international trade, they've decided to revise their expansion plans for the U.S. market. Instead, they're focusing more on local growth, including opening a new retail experience in Belfast.
Right.
So it illustrates how tariffs don't just affect immediate sales, but also long-term business strategies, investment decisions. What do you make of that proactive approach compared to, say, the more reactive stance of others we've talked about?
It suggests that maybe businesses with more flexibility, or perhaps those in really niche markets, might have more capacity to adapt to these kinds of changes. It's not easy for everyone, clearly.
True.
So, okay, across these initial reactions, we've seen this real spectrum. Significant worry in whiskey and automotive, a more understanding view in specialized manufacturing, and this kind of cautious optimism with a pivot in strategy for the watchmakers. Let's now turn our attention to how the government and political figures have responded to these new tariffs.
Right. The political landscape has certainly been active. Prime Minister Sir Keir Starmer acknowledged there would be a clear economic impact, both for the UK and, globally.
Mm-hmm.
He stated the government was prepared to deal with the consequences, but also emphasized their continued hope of securing a comprehensive trade deal with the U.S. to sort of mitigate the negative effects. It highlights that dual approach. Prepare for the worst, but still pursue a diplomatic solution.
We also heard some suggestion, didn't we, that a deal might have been quite close before this announcement.
Yes, Business Secretary Jonathan Reynolds indicated that a trade deal with U.S. officials had been nearing completion, but was ultimately awaiting presidential sign-off.
Ah, so the timing is interesting.
It does raise an interesting question, yeah. Does this tariff announcement signal a complete breakdown of those negotiations? Or is it maybe a tactical move within a larger negotiation strategy? Hard to say for sure yet.
And what about the perspective from the conservative side?
Mm.
They seem to be framing Brexit in a potentially positive light in this context.
That's right. Figures like Chris Philp and Andrew Griffiths, they pointed out that the UK's new 10% tariff is lower than the 20% tariff now facing the EU on their exports to the US.
Okay.
They suggested this difference could be seen as a Brexit dividend, potentially offering a relative advantage, helping protect some UK jobs and businesses compared to their European counterparts. However, it's important to note, as Philp himself acknowledged, sectors like car exports still face that higher 25% car tariff regardless of Brexit.
Well, it's not a universal win, even with that argument.
Exactly. The picture is still complex, not uniformly positive.
And Northern Ireland's unique post-Brexit trading situation also came into the conversation, didn't it? That is another layer.
Absolutely. Northern Ireland Economy Minister Caoimhe Archibald expressed specific concerns regarding the region's unique trading arrangements under the post-Brexit protocol with the EU. The worry is, if the EU decides to retaliate against these U.S. tariffs with its own tariffs on American goods.
Then those higher EU tariffs could hit U.S. goods coming into Northern Ireland.
Precisely. That could create additional complexities and costs for businesses operating within that specific trading framework. It really highlights how interconnected global trade is and how actions in one area can have these unforeseen ripple effects elsewhere, doesn't it?
Totally. Layers upon layers. We also saw some more specific political calls to action, like Sir Ed Davey from the Liberal Democrats suggesting a targeted tariff on Tesla. That was a rather specific proposal.
It was indeed. That targeted suggestion was part of a broader call from Sir Ed Davey for an economic coalition of the willing, basically, encouraging other countries to work together to counter President Trump's tariffs.
Hmm.
His idea of a specific tariff on Tesla was kind of intended to demonstrate that there are alternative trading partners and potential consequences for these new U.S. trade policies. It's definitely a more assertive stance compared to the government's focus on negotiation.
And Reform UK offered a different economic perspective, didn't they? Focusing on inflation.
Yeah, Zia Youssef of Reform UK predicted that while the U.S. tariffs would likely lead to higher inflation in the States, the U.S. government would probably implement offsetting measures, like increased government spending or tax cuts to cushion the blow.
Right.
He contrasted this with the UK situation, suggesting the UK might face similarly high inflation without those same offsetting measures in place, raising concerns about potential negative fiscal consequences here. It just highlights how different countries might experience and respond to the same global trade changes.
We also heard from Chancellor Rachel Reeves, hinting at a potential willingness to adjust the UK's digital services tax as part of these trade negotiations. That feels significant given the US has previously raised concerns about that tax.
It does signal a potential shift in the UK's negotiating position, yeah. The digital services tax, which mainly hits large U.S. tech companies, has been a contentious issue in past trade discussions. Chancellor Reeves, indicating flexibility there, suggests a willingness to compromise if it helps secure a broader trade agreement that alleviates the impact of these new tariffs. It's a clear example of how trade negotiations often involve these kinds of trade-offs across various economic policies.
Okay, so politically, we're seeing a range of reactions, a clear emphasis on trying to navigate this through negotiation, while also maybe considering domestic policy adjustments. Let's now broaden our view beyond just the UK and look at the wider global economic implications. Because we know, while the UK faces a base 10% tariff, other major economies are facing significantly higher rates.
That's a critical point. As you said, the EU faces 20%, China 34%, Japan 24%, South Korea 25%. Some others, Cambodia, Vietnam, even higher. This clearly indicates a significant shift in U.S. trade policy that extends far beyond just the UK. The scale suggests a deliberate move towards greater protectionism by the U.S.
And the reaction from the European Union to those higher tariffs was pretty strong, wasn't it?
Absolutely. European Commission President Ursula von der Leyen issued a stark warning about dire consequences. She described these tariffs as a major blow to the world economy.
Strong language.
Very. She specifically raised concerns about the potential for increased costs for everyday goods, groceries, transport, medicines which would disproportionately affect vulnerable populations. It highlights the potential for these tariffs to have a widespread impact on global consumer prices.
What about the impact on smaller businesses globally? We heard the Federation of Small Businesses here in the UK express significant concerns.
Yeah, and their concerns are likely echoed by small business organizations in many countries. The FSB here called the 10% tariff a major blow to SMEs, pointing out that a huge chunk, 59% of small UK exporters, sell to the U.S. market.
That's a lot.
It is. They expressed fears of untold damage to businesses trying to stay profitable, potential for stifled growth, lost opportunities. They even urged the UK government to be ready to offer emergency support to SMEs at risk of collapse. It just underscores how tariffs can hit smaller businesses harder, as they often have fewer resources to absorb costs or pivot to new markets.
The potential impact on jobs, particularly in that car industry, seems to be a recurring theme and a significant worry throughout these reports.
Indeed. The Institute for Public Policy Research suggested over 25,000 direct jobs in UK car manufacturing alone could be at risk as a direct consequence of the car export tariffs.
25,000.
Yeah. And the Society of Motor Manufacturers and Traders, the SMMT, reinforced this, saying manufacturers are unlikely to be able to just absorb these tariff costs. They might be forced to review production levels, which obviously has huge implications for employment in the sector. These figures paint a pretty concerning picture for a key UK industry.
Even the Office for Budget Responsibility, the UK's fiscal watchdog, they have analyzed the potential economic fallout, haven't they? What did they find?
Yes. Their analysis suggests that a sustained U.S. tariff in the range of 20–25% could completely eliminate the UK government's current fiscal headroom. That's basically the buffer the government has for extra spending or tax cuts without borrowing more.
So wipe out the wiggle room.
Potentially, yes. However, they also presented this hypothetical, very limited tariff war scenario where somehow the UK avoids these tariffs altogether. In that specific case, they suggested there could even be a mildly positive impact on the UK economy due to something called trade diversion.
Trade diversion.
Yeah, it's where U.S. buyers facing higher prices on goods from countries with tariffs might switch to buying relatively cheaper UK goods without tariffs. But the OBR really stressed this is not their central forecast. Any scenario where the UK does face tariffs is expected to have a negative economic impact overall.
Right, okay. So let's just touch on President Trump's rationale behind all this.
Yeah.
He's framed it as a move to revitalize American industry, a liberation day, as he put it.
Exactly. His stated goal is to encourage businesses to bring manufacturing back to the United States, create American jobs by making imported goods more expensive. He talks about imposing what he calls reciprocal levies to address what he sees as unfair trade practices by other countries.
Hmm.
He's also been really vocal about his view that other countries' trade barriers, including things like their VAT systems, value-added tax, which he considers exorbitant, are unfair to U.S. businesses. He's clearly positioning this as a fundamental shift, prioritizing domestic American economic interests.
Despite those strong pronouncements, the UK government's stated aim still seems to be to negotiate a way to lessen these tariffs, right?
That's the clear indication, yes. Government officials have expressed their hope that these announced tariffs represent a starting point, maybe a ceiling that can be lowered through ongoing trade talks with the U.S. The Confederation of British Industry, the CBI, representing lots of UK businesses, has also voiced support for the government's efforts to negotiate a more favorable outcome.
So there's still hope for talks.
There's still hope pinned on talks, yes. It highlights that ongoing tension between the new tariffs and the desire for continued close trade relations.
Okay. So as we bring this deep dive to a close, let's just quickly summarize the key takeaways for you listening.
Right. So the new U.S. tariffs, while a base rate of 10% for the UK, have this potential for a really varied impact across different sectors. We've seen significant concerns from industries like Scotch whiskey and automotive, heavily reliant on the U.S. market. But then some specialized manufacturers might see less direct impact, while others, like those watchmakers we discussed, are having to actively rethink their growth strategies because of the increased uncertainty.
And from a political standpoint, the UK government is clearly engaged, trying to navigate this new landscape, with hopes definitely pinned on securing some kind of trade deal to mitigate the negative consequences. Globally, the reaction has generally been one of concerned worries about economic headwinds, the impact on international trade overall.
Precisely. It's a complex situation. It's evolving. There's still significant potential for more negotiations, maybe retaliatory measures from other countries, and certainly unforeseen economic consequences as these tariffs actually start to bite. It really signifies a notable shift in the global trade environment that's likely going to continue unfolding.
This certainly gives you a lot to consider. So thinking about all these varied reactions, these potential long-term shifts in global trade, maybe the final provocative thought for you is, what might be the most unexpected opportunity or indeed challenge that arises for the UK economy as a direct result of these tariffs? And maybe more fundamentally, what assumptions that we've held about international trade might need to be seriously reevaluated in this new, seemingly more protectionist environment? That's your food for thought. Thanks for joining us for this deep dive.